Hi everyone. Good evening. Um, we will just start the webinar. We will wait for 5 minutes till the other attendees join. Good evening, everyone, and a very warm welcome to today's expert panel discussion. We are going to discuss on ISD IMS equal to ITC without risk, your roadmap to tax assurance. I am Chaya from marketing team at Cygnet.One, and I'll be your host for this insightful session. Over next 60 minutes, we will uncover practical compliance driven strategy that can help enterprises streamline their ITC workflow through accurate ISD credit distribution and IMS based credit note tracking. We are elated to co host this session with our knowledge partner, HNA and Co LLP, one of the most respected names in the indirect tax and GST space. To drive this session forward, I would like to introduce our moderator, CA Kronal Shah, who is GM Domain and Consulting at Cygnet.One. Kronal is a member of ICAI, a CMA accountant, and a management graduate with a background in finance and taxation across the years of experience advising clients on intricate tax matters in India and Middle East. He brings a wealth of financial acumen and regulatory insights to the world of taxation. At Cygnet.One, he heads the managed services, ensuring timely tax compliance for some of the India's finest corporates. We are joined today by a stellar panel of industry experts. Next, we go to Mr. Anil Rajnala, who is business head at Cygnet.One. Mr. Anil Rajnala, the business head at Cygnet.One, is a seasoned professional with a strong focus on business process transformation using technology. He has 30 years of experience encompassing business operations, customer operations, and distribution in varied fields, including tax technology, telecom, digital transformation, etc. We have next our special guest in this panel discussion, Mr. Prasanna Kumar, CMA Prasanna Kumar. He is Deputy General Manager and Taxation at Men and Human Filter Private Limited. He has over 18 years of experience in indirect tax compliance, advisory implementation, and litigation. He leads compliance and internal audit across multiple operations, including two manufacturing plants, a trading warehouse, and a global capability center. Next, we go to Mr. Akshay Hiragange, CA Akshay Hiragange. He is partner at HNA and Co LLP. He is qualified as chartered accountant in 2016. Uh, he has experience of over 3 years in internal audit, compliance and assistant, and in the past 7 years directing focus towards GST including audit and consultancy matters. Next, we go to CA Vikram Kataria, partner at HNA and Co LLP. He is a chartered accountant having a 5 years of experience in Big Fours. He is currently a partner at HNA and Co LLP and heads the Chennai branch. He has co-authored the book Practical Guide to GST on Healthcare and Pharmaceutical Sectors, published by Bharat Law House, and Practical Guide to GST on Automobile Industry, published by Tax Sutra and Bharat Law House. Next, we have Ms. Reshma Pillai, product expert at Cygnet.One. Reshma helps businesses streamline and automate core processes to enhance efficiency and deliver operational excellence at Cygnet.One. With a strong background in project implementation and delivery, she specializes in building tailored solutions that align with specific business requirements. Over to you, Krunal. Can you please drive the session?
Thank you, Chaya. So, India's evolving GST framework continues to reshape the way organizations approach tax compliances, internal processes, and technology adoption. One of the most significant recent shift has been the introduction of ISD mechanism for distributing common credits and introduction of IMS. The move that has both brought opportunities and challenges to the forefront. The questions around cross charge versus ISD, implication of credit note adjustments, and integration with the systems like IMS are becoming increasingly critical. Beyond compliances, there is also a growing need for businesses to leverage the data, embrace emerging technologies, and strengthen governance models. For CFOs and tax heads, the question now extends beyond statutory compliances to include optimal allocation, audit readiness, system integration, and governance. With this increasing digitalization through e-invoicing and IMS, and the government's push for real-time compliances, organizations now must rethink their technology investments and data strategies. With this, the finance and tax leaders are facing increased pressure uh, to ensure both compliances and strategic alignment with their organization. Today's discussion aims to unpack these emerging challenges and share insights on how you can drive the value through while navigating the evolving text landscape. So we'll start with our discussion with the ISD. So first question here is for Vikram, whether ISD can be considered as an alternative to cross charge, or the relevance of cross charge still exists.
Kunal, can you please confirm if I'm audible?
Yes, Vikram, you're audible.
Yeah. So I think first what we need to understand is that this concept of cross charge existed right from July 2017, which is basically emerging from your entry in Schedule 1. So it is not something that has emerged all of a sudden by virtue of this ISD coming into the picture as a mandate. So this was always part of the GST law. In fact, it was only the ISD provisions which were not mandatory prior to 1st of April 2025, which was more of a recommendatory or an option given to the taxpayers to follow. And interestingly, if you look at this circular 199, which was issued by the CBIC before the amendments also were in place, so the one of the scenarios covered in that circular also spoke about whether the expenses incurred by the particular office for the benefit or which can be attributable to other branches, whether it can also be routed through a cross charge option. So there the circular actually provided that if the services are for the benefit of the other branch, then they said even a cross charge and as an option is available. So though the initial part of the discussion was on ISD, again saying that ISD is option, but the aspect of cross charge also was discussed in that particular clarification. Coming now to April 25, with ISD now becoming mandatory, so the importance of cross charge has to be looked at purely in terms of whether there is any service or a supply which has been made between two of those distinct persons. It cannot be a case where the mere expenses are being transferred under the color of a cross charge. So now we have to be even more particular. So the route of ISD becomes mandatory for all your expenses which has to be allocated to the branches, whether it is directly benefiting the branches or it is indirectly benefiting the branch locations. ISD will be the route. Cross charge still continues to exist, Krunal. If I give you an example, because generally people get a doubt that once I do an ISD for all the expenses of head office, whether at all there is a relevance of cross charge. Basically, I feel that is the background of your question. So if I take our own live example, say I am in Chennai, if one of our clients has a litigation matter in Bangalore, say the fees agreed with the client is say 75,000 for the appeal and 50,000 for the personal hearing. So where I from Chennai do the drafting of appeal, Akshay, who is my partner in Bangalore, he will do the representation of the case in Bangalore before the appellate authority. So though I bill the client for the entire 75 plus 50,000, the agreed fee, there is a service which is being provided by Akshay to me for delivering a service to the client. So that can be a very simple, straightforward example where this cross charge still continue to exist. So we will have to identify case to case basis whether it is merely a transaction involving cost incurred by one location and shared by others, which could be an ISD route, or it is a case where actual element of service is involved between these two distinct persons. So I hope I have answered your question, Kronal.
Yes, Vikram. So that brings me to the next question that at times enterprises struggle with aligning the credit distribution with the actual usage or usage across the branches, like you mentioned over here. So in your experience, what are the common procedural mistakes that are seen in this kind of allocation? And should the companies follow same cost allocation principles that that are used in financial statements also for the ISD distribution?
Yeah, so this is one of the common questions which we have faced while implementing this ISD across various clients across industries is that, sir, can we adopt a different methodology which is other than the turnover rational, which is there in the ISD rules, Rule 39. So the question which comes is, can I look at the actual consumption of the services location wise and then do the allocation? Now the problem here is the law has given a particular mechanism through which this distribution has to happen. Now this mechanism has been built in basis the study which the government has done, and this is not a new principle where we have seen that there are certain provisions, even our rule 6 of Senvat credit rules or rule 42 of the CGST rules which provides for ITC reversal. It is based on the rationale of turnover. It is not basis the rationale of the consumption if you are able to identify location wise. Unless you have a bifurcation of services which are common and direct, beyond that I don't think you have a liberty or an option to further bifurcate at consumption level. For example, if you have a services received from Google and the Google gives you a consolidated invoice for the entire services done for the particular period in evaluation, the taxpayer then cannot say, okay, this much of consumption of Google service was by say my Ahmedabad branch, this much of Google services is towards my Delhi branch. That cannot happen. It has to happen through a turnover rationale. And even if you look at how the courts have looked at this particular kind of computations or the procedures laid down, specifically if I could say that there is this Supreme Court judgment of Ambe Cements in the context of a different law, but what the court said that was, if a particular procedure is laid down in the law, the particular person who is referring to that law has to follow the procedure in the light in which it has been provided. You cannot have a different way of implementing that rule. Similarly, in the context of Senvat credit also, there's a decision of Delhi High Court where they said that nothing doing, you please follow what is prescribed in the rules. Coming to the second part of your question, Krunal, where I think you are asking about the accounting of these expenses in the books of accounts. Especially if I look at many of our NBFCs and financial sector clients who have branches in the count of thousands. So if you look, typically an NBFC will have about 1,500 branches, or a bank may have 2,000 branches across the nation. They always have a system of allocating the cost incurred by the HO across all the branches. There is an accounting entry which happens through a journal entry. Cost gets allocated. That is only for the purpose of identifying the profitability of each of those branches, but that does not have any impact on your manner of distribution. So that will not be a basis. You only have to follow basis your turnover rationale as provided in the rules of CGST, Rule 39. I hope this was addressed, Kunal.
Yes, Vikram. So, the next question, this is Akshay, this is for you. So, whether Rule 54(1)(a) applies only to forward charge invoices or also to the RCM invoices, and what are the various disclosure mechanisms that are available to taxpayers for such transactions?
Akshay, if you permit, shall I complete this part?
Yes, yes, go ahead,
Yeah.
Vikram.
So, Kunal, since this is connecting the chain of ISD, I'll just take over this question. I hope Akshay does not mind that. So, see, actually, what has happened, there is a history of this entire Rule 54(1)A coming into the picture. So, in 2019, after the 25th GST Council meeting, there was one agenda in the meeting saying that what about the payments done under reverse charge and how these have to be considered for ISD distribution. So, that was basically one of the agenda items there. So the recommendation there was to enable a mechanism under 54(1)A to allow the transfer of the GST component paid under RCM from the regular number to the ISD number. That was basically one of the thought process for which this 54(1)A was implemented. However, if you read the wordings of 54(1)A, there is no specific mandate or condition that this particular facility is available only for RCM transactions. That 54(1)A provision only says that if it is between the same state code, the supplier invoices can be moved from your regular GST number to your ISD GST number. From therein, the distribution can happen. Now, interestingly, in Rule 39, 1A has been inserted, wherein the specific provision has been carved out for the RCM transactions, referring to this Rule 54(1)A, saying that this credit can be moved to ISD GST number. From that, the distribution can happen. So when the law is giving a very clear mandate or a reference of RCM only in Rule 39(1)A and not in 54(1)A, I think that itself is sufficient to give a basis for us to say that 54(1)A is a larger provision having a bigger mandate. 39(1)A is a specific mandate only for RCM. So in my humble view, Krunal, this 54(1)A is not merely for RCM transactions. It is for even third-party vendors. And one last point is, we have to look at the objective of this ISD compliance. Any procedure or a facility given in the law has to be looked in the perspective of enabling that compliance to happen. If we read it in a very restrictive sense, possibly a third-party vendor invoice, if it is wrongly reported in my regular GST number, then the ISD compliance becomes a challenge. So I have to look at this 54(1)A more as an enabler of doing ISD compliance rather than more of a restrictive provision. So I think with that, we should be focused more on enabling compliance and not restricting the procedural aspects provided.
Yeah. Prasanna sir, this question is for you. Since you lead the internal compliances and operations across the multiple manufacturing plants, trading warehouses, and so on, what are the biggest operational hurdles you have faced while aligning ISD distribution with the actual divisions?
Yeah. Can you hear me? Huh?
Yes,
Yeah. Good evening, one and all. As an organization, as an industry, when we have looked at this IST distribution provision, so the biggest challenge was in identifying the common versus location-specific input services. So first, whether should we classify a common or a location-specific input tax credit at a whether at a vendor level or as at a transaction level. In my view, so we cannot classify at a vendor level because many situations what happens we may be availing from the same service provider to a particular location and also which are common. So to take an example, if I am availing a retainership services from Hiraging and Associates, retainer services is for the entire legal entity. It's not specific to one location. So obviously I need to route it through IST and I have to distribute among all the registration across India. Then there may be some specific services, maybe an health check done for a particular location, or there may be a litigation services which I'm availing it from them. So then it is a location specific. So therefore, I feel that while classifying the transaction, we cannot do it at a vendor level. It has to be at the transaction level. So it is not just limiting to the consultancy, even the audit services, licensing software services, and even airlines, flight ticket booking services. These are the major services what I feel where we find difficulty to identify between a common and a location specific service input services. And to handle this, first of all, I feel, my opinion, most of the organization will definitely have the limitations in their ERP. So to rule-based ITC allocations, because the ERP is really not capable enough to handle uh, this requirements. Even we cannot even automate the GSTR6 to comply to file our IST returns also. And because of this, it is more or less it's an manual driven task, and which will which will lead to a high risk topic. And if you look at we always talk about that IST input credit has to be distributed based on the turnover. So obviously this we will not be able to handle through any ERP or any system based. I feel still many of the organization use Excel based calculation to distribute it. So this may lead to a lot of error and miscalculation, and also rework during the audits. Um, Even though organization is well equipped and issuing PO, so for which which GST and the invoice should be issued, but still the person who is raising an invoice may not look at the PO received from the organization. So as long as they are maintaining one customer code for an organization, so in the customer master there will be only one GSTN. So if they are regularly billing it to IST, so they use the IST GSTN. Or if they are if they have maintaining a regular GSTN, so then they will be issuing it to a regular GSTN. So that will again find difficulty for us to go back to the vendor and get it rectified, and availing this credits. So further, we also say that turnover based allocation is is what how we should distribute the IST. But there are many chances that we will be adding a new locations in the middle of the year. So then we have to recalculate the whole turnover percentage, so before distributing the IST, as and when there is a change in the new locations, or removing of any existing locations. And then comes to IST, sorry, and then comes to RCM compliance. So as Vikram just mentioned that RCM, we may not be directly able to handle through IST registration. So then what happens? Then we may have to discharge our RCM liability in our regular GSTN, then discharge as a liability, and transfer the credit to IST. From there we have to distribute. So this is another biggest challenge, and this may lead to a delay in availment of the ITC, and this may also lead to a blockage of our working capital. And the last point, so if there are any mistake in in IST compliances and or issuing IST invoices, so it has to be rectified through a credit note, which is a very cumbersome a process.
Right,
I
sir.
hope I answered probably a lengthy one, but this is what the industry experience which I would like to share.
No, sir, actually, this was quite helpful. So before we switch to IMS, Anil sir, from your experience with interactions from the client, is there anything that you can add, or maybe how can tech help in this, in managing these compliances?
I have only one small point to add. I think ISD, I think technicalities of it, I think Vikram and Sir has already. Point is, how are you going to execute this ISD operations? That's the key part. Now, whether the calculations or the working part of it, of whatever you need to do, or the distribution piece of, will it happen offline? Will it happen on an Excel sheet? Or do you want to integrate it with a system in the same piece where you are doing your rest of the filing? It is well, including the distribution piece. The data can be fetched straight from your ERP, and based on your past year's turnover, it could be auto distributed. Challans can be generated, and the distribution can take place. All that I am trying to say is there has to be a structured way of doing this entire distribution accumulated into one place, so that whatever we are dealing with starts happening instantly and the data is available into one place. So that's my humble submission on the part of how the execution piece should is while you are doing that entire distribution. Thank you.
Thank you, sir. So we are just moving on to IMS now. Akshay, this question is for you. So IMS has been around for quite some time now, and the practical challenges around it has been addressed to some extent. So before we go into those details, can you explain if after all these proposed amendments in Act and Rule, is taking actions in IMS really mandatory? And shall deemed acceptance also be considered as an actual acceptance and availment of ITC on the invoice?
Yeah, thanks, Pranal. That's a good question. So I will answer it on from both points of view, for and against. So from the technical perspective, the Finance Act, although it was passed, there is a specific requirement for certain sections which require a notification to be issued for it to be effective in the GST law. And section 121, 122, and 123 of the Finance Act, these pertain to the changes which have been made in the CGST Act with respect to the IMS. But these sections have not yet been notified by the CBIC. So this means that it has not yet been put into effect in the GST law in terms of the CGST Act. But as we all know, from October 2024 onwards, the IMS is live in the GST portal. So this is another instance where the uh, technical aspect of the portal has gone over and above the law. Ideally, this is something which should not be the case. But we have also seen this in the case of GSTR 2A versus 3B in the past. Additionally, there is a rule 67B which has to be introduced in the CGST rules, which has also not yet been notified, which pertains to the IMS. So from a legal standpoint, from a taxpayer's perspective, can we say that when the law is not clear, when the law is not effective, how can you expect that I am required to satisfy the IMS provisions? What should I follow? There is nothing which is written in the rule book. There is nothing which is given in the governing act to follow the IMS. There is in the Safari Retreats Supreme Court case, they had discussed on the interpretation of statute. And one of the outcomes of that was, if there are two interpretations of the statutory provisions which are possible, the court ordinarily would interpret the provision in favor of the taxpayer and against the revenue. This is when there are two interpretations which are possible. Similarly, it is a settled principle of law that whenever the judiciary looks at a case, they always look at the law forwards and not backwards. This also is coming out in terms of a legal maxim. Now, these are all the technical standpoints from where we can dispute that IMS is not valid until there is a notification which enables these provisions in the CGST Act, and the rules also are prescribed for us to implement it as what is given in the provisions. But let me come to the practical side of it. In the past, we have seen various notices which have come on the grounds of GSTR 2A versus GSTR 3B ITC mismatch. And this was significantly disputed in the court of law, wherein even in the Kerala High Court, in Nahashukur case, they upheld the validity of Rule 36.4 and Section 16.2C, saying that this is not against the right to do business, and the burden of proving the eligibility of ITC remains on the recipient. Keeping that in mind, there was also one circular 183 which came out, which required that I have to provide a vendor certificate and a CA certificate for instance of mismatch where taxes were paid, but it's not reflecting in the GSTR 2A. And this was with effect from July 2017. But the provisions of Rule 36.4 came in from October 2019 only. So if you see the timelines here, although the provisions were brought in at a delayed basis, the requirement to do matching, the requirement to display eligibility of ITC was from July 2017 itself. Of course, there have been various cases where they have given it in favor of the taxpayer, where he was able to prove that the ITC was genuine. So I think we should also follow the similar process for IMS. We should ensure that there is no tax loss to the government, because IMS has been implemented to overcome one specific problem, that is matching of credit and matching of even the credit notes. Circular 212 was issued for credit notes which were raised, wherein they should again obtain a, CA certificate or a vendor certificate to match that the recipient has reversed the ITC wherever credit notes were raised by the supplier. To this end, it was specifically this circular came out because of a HUL case in Rajasthan High Court. And they told that until and unless the system has been put in place by the GST, GSTN, the circular would be active. So in my view, IMS is that tool which has been implemented to overcome such difficulties to enable matching concept to a larger degree and to ensure there is no tax loss to the government. So keeping that in mind, I would suggest on a practical basis that taxpayers understand and start using IMS and ensure that they have a specific tracker which will help track all the actions which are being taken, manual adjustments which are being made on behalf of the errors or actions which are being taken by either my customer or what I take with regard to my vendor. Please note any actions which you take, you also would be facing actions taken by your customer. Be very clear about the documentation procedure. Who would raise which document and when they will raise? Who is required to raise the credit note? Will there be a debit note from the side of the customer? What would happen in cases where the original invoice is not accounted at all? Should I raise a credit note in those instances? So there are various situations which may come up, which would require a specific case-to-case basis understanding and discussion. But due to the paucity of time, I would like to suggest to follow the IMS to a certain degree to avoid future disputes. If you are a risk averse entity, this is a position that you can take. If you are able to take the risk, if you would not like to commit to any provisions which have been directly brought into the GST portal where there is no provisions in the law, then you can wait. You need not implement IMS. And in the future, once the provisions do come into picture, then you can start following the IMS guidelines. Alternatively, make representations through your industry, through the association. There's a very common saying, only a crying baby is given milk. So raise your voice. Thanks, Kumar.
Yeah, Akshay, so keeping this legality aside, and coming to this, I mean, there has been some relief by way of providing buffer between accept and reject decisions for the credit notes. But there would be again a lot of practical challenges in correlating this credit notes with the invoices. There would be short booking of invoices in some cases. A lesser amounts of credit note might be accepted by the users. So can you elaborate on this changes and how these adjustments are going to sum up while preparing the annual returns and for during the audits?
Yeah. So Krunal, one of the major areas which have come into the IMS is credit note, which is causing a lot of difficulty for the industry. So practically, if you see, there are situations where credit notes are being raised by the supplier, but when customer is completely unaware that this credit note has been raised. So what happens is the customer rejects these credit notes and then the liability of the vendor is added back. And this further, now if you see, there is a auto lock of the GSTR 3B returns. That means I cannot edit table 3 of the GST returns going forward. This means that whatever liability has been added back based on rejections which are made by my customers, I will not be able to manually edit in my GSTR 3B. This means I have to do some adjustment in my upcoming month GSTR1, or I have to go back and request my uh, customer to accept these credit notes which I may raise in the upcoming months. So the credit note itself is a major difficult area for the industry. Best practice, of course, is to ensure that before you are raising the credit note, you get the approval to raise it in the first place, get the customer's acceptance. Wherever an credit note is being raised to cancel an invoice, confirm whether the customer has accepted the original invoice. If he has not accepted the original invoice, there is no requirement to even disclose this credit note. Raise it for your books of accounts, do your invoicing procedures, but do not display in your GSTR1. Even that original invoice should be removed from the GSTR1 return. What happens is only the fresh invoice then is displayed for the customer. There is no difficulty for him to accept that document in the GSTR2B. So this is how I think a better disclosure and acceptance can be performed, but this would require constant communication between the vendor and the customer. With regard to annual returns, which you mentioned, I think annual returns would be linked to my GST returns. If I correct this part of my disclosures, I will be able to ensure that my annual returns disclosures go seamlessly and it is based on my GST returns.
Okay. Thank you, Akshay. So, Anil, sir, this question is for you. During our conversations, we come across challenges with ITC claims, IMS reconciliations, and complications arising from the credit notes. Many of the times, tax teams relies on the Excel workings. So the larger issue over here is that businesses still consider Excel as a sufficient tool for handling the complex tax and operational issues. So what are the biggest hidden costs for the companies? What are the hidden costs that the companies face due to lack of being tech enabled for the day-to-day operations and the processes?
Yeah. So, yeah, generic question. And let me put it into the perspective. First and foremost, the IMS part. Now, reconciliations we were doing earlier. What is different with the IMS reconciliation? The only part is now government wants it that please ensure that this is digitized, share it with it online, it is available reference any point required in the future, at least for yourself, because this is what you have communicate invoice wise your entire interactions with the government. Now the question about the manual part of it or the Excel sheet part of it. We all understand that even for reconciliation, it is a mix of multiple Excel sheets that gets into finally deciding what is it that you want to achieve. And that too, if you are, let's say, an organization of 20 to 30 odd GST and IDs, and the number of reconciliations that we do, IMS is just a part of it, which is 2A versus this. Then there is GL reconciliation, then there is IceGate reconciliation, and various other reconciliations put to this entire thing. I think these kind of organizations end up generating anywhere between 70 to 80 or 100 Excel sheets in a month. If you have 30 to 30 or the GSTNs for which you have to do reconciliations. Just imagine year on year how you will be able to keep track of any of these independent workings. I keep narrating this in most of the time when I'm in front of the customer that presume I want to see the working sheet of September 2020. How easy it is to be made available click of a button. Most of the times I get a response saying that the person is not there or the laptop has crashed out. So there are challenges most of the cases. Best is, and secondly, I've spent almost 7 years now with the e-invoice, with the entire GST. We understand where Excel sheets are required, what logics are being put in manually. Why can't there be a learning based on this to understand what is the exact codes that I need to put in so that all the required permutation combinations are available on a single format or in a single application. I just have to go and plug in my specific requirements, which is document specific, invoice number specific challenges that I have, or various other fields that I have, and ensure that entire reconciliation is done without the intervention of Excel sheet. Say Excel sheet, only one thing comes to mind. Excel sheet is the death of digital. I know each one of us into this entire setup right now use Excel sheet 24/7, but the minute you get into a system driven logics, having learned in the last 7 years what all logics you want to put in to get your organization specific probable buckets. I am not saying the buckets, because in most of the cases you have 30 to 40% as the variation which comes out, which needs to be accommodated. And the 7 years experience will tell you how do you manually accommodate. The same thing can be done through a system. Once done, you will ensure two things. One, you will have all your data into one place, always, a single source of truth. And there is one thing which someone shared with me very specifically in last week. He said, "Sir, tell me, if a notice comes to me, how can you help me ensure a reply within 24 hours? The only way is if I have my data into one place of all the thing, including reconciliations. I think taking out the data and preparing a response within 24 hours is a distinct feasibility." So to answer your question, Excel sheet, the earlier the better we move out of it, and look into a technology which gives you all the logics which you can apply to get your probable buckets on a single platform. Once you have, I think you should do it. And since you're talking on a Cygnet platform, it out. The advanced reconciliation module actually helps you to stay away from the Excel sheet and try and do whatever you want and make available into one place. I hope that addresses the query that you raised, Pranav.
Yes, sir. Just to add on to that, how can the organizations leverage the vast data that is generated through e-invoicing and IMS to have a competitive advantage? And what role should AI and machine learning play in future for GST strategies?
See, IMS, e-invoice, these are, when you say about how they are going to leverage, to my point is first foremost, I think Akshay was mentioning about the credit note and the entire aspect of it. The most critical part in this entire thing is what is the enability that a platform can give you to get in touch with the vendors online. One is the notification part of it. You should actually have a system where while working onto something, there are, let's say, the differences which are there into the entire system, or there are mismatches. The system should give you an online flexibility to reach out to the customers immediately from the portal itself, and not only reaching them out through email, directly to the notification center of the GST and ID of the customer. By doing that, you develop a clear string of entire communications that can happen. That is part number one. Part number two, when you talk about the entire, let's say, AI and ML activity, you have a series of functionalities that are happening on GST, on IMS, on e-invoicing, on e-way bill. And anyone today wants to know what is my GST assessment part of it. Let's I talk about of 2020, and I want to know where do I fare with my e-invoicing, with my e-way bill, with my various filing part of it. Only have your data into one place, then only AI ML can work. For any AI ML to work, your structured data is the element. Once you have it, I can give you an entire assessment score based on the 7 or 9 parameters laid down by CVIC. We can take out that entire thing, give you that entire parameters, and show you in each parameters where you are rating, what can we do, and what is the notices that you should be ready with in case of there are any deficiency to any of these parameters, and how one can get ready. So even to address to this entire aspect, get into a single source of truth. The AI ML will give you all the required risk scores on which you are taking a risk, what corrective actions you need to take, and you need not wait for years together. These inputs can start coming to you every month, saying that what action needs to be taken on each of these aspects and where you can get ready.
Got it, sir. So a single source of truth and a unified platform becomes all the more important. Um, okay, so that brings me to the next question. How can organizations balance government's push for real-time compliances through IMS with the practical challenges in processing the e-invoices? Processing the payments, and what role leadership should play in this digital transformation?
Okay. I read IMS differently. Akshay will look at it absolutely from the functional perspective. The way I look at it is, one, why should government give me IMS data within few hours of the invoice generation? There is something at the back of the mind. And in fact, if I recollect this entire thing, it was in November to October, I believe, 2023, that government decided to give to all the GSPs counterparty e-invoice JSON. They did it because they wanted that everyone should use this data, update their purchase register, so that was ready with that purchase data on a day-to-day basis. Why was that necessary? If you look into this IMS operation today, we are talking about taking that action of accept, reject, pending, which Nirmala ji wants to know, because so that she can help understand what is my liability that I will have to pay in the form of ITC. Fully understandable. But how is it that government or the enterprises will be ready to take advantage of it? Today, how is reconciliation happening? You get the data on the 5th of the month. You have another 1 week's time to do your reconciliation. By 12th, most of the organizations get ready with their entire probable buckets. And by 14th, they are ready to take their entire IT credits, whatever they want to do. What will happen the day IMS becomes a mandatory activity? By 12th, you are generally landed up with 30 to 40% mismatches where you take your calculated risk, saying that I'll adjust most of these things. Let me take the credit now, and we will then reach out to all the vendors and take the required action. The way I look into it with IMS, one should be in a position to give to every vendor 7 to 10 take corrective actions on every invoice. Every single invoice, give them 7 to 10 days, specifically where there is a mismatch. And mismatch can happen every day. For each of the invoices that are coming, there might be some mismatches. To do that, the best part is to digitize your entire purchase invoice journey. Today, it takes 15 days to get the purchase entry into your ERP. Can you ensure that this purchase entry can come to an ERP within 7 days? If you can make it happen, then the invoice of date 1, you will start reconciling on the 7th. The same day, you will notify to your vendor that this is the mismatch. And every single vendor will have minimum 7 days to take corrective actions. You will have sufficient time to reach out to the vendor, take the corrective actions. So on the 12th of the month or the 14th of the month, leave the last few days aside. But up to 25th or 26th invoices, whatever they are, you would have reconciled everything with the vendor's concurrence on day 1. This can happen if you digit your entire purchase invoice journey, ensure that it is digitized, make it a point that your entire purchase entry gets into your ERP within 7 days of invoice generation. If we can reach out to this, your entire IMS part will get addressed, and you are rightly so. Leadership has to intervene. This is not a tax team's job. Leadership will have to intervene, bring in the supply chain and the procurement team together, tweak their purchase invoice journey, digitize it, and thereby help the entire tax team to do the IMS reconciliation on a day-to-day basis. And that will ensure that you optimize. I will not use the word maximize, but you will optimize the entire ITC activity, and the tax team will be very confident to go and say that let us claim this, because now the day IMS is implemented, no tax team will take that risk, that claim it, we will look at it later on. Nobody will do that. And that is what will lead to a huge gap in your working capital requirement. This process and this digitization with leadership intervention will give them platform to take every single invoice on its merits.
Got it. Prasanna, sir, we would just like to have your thoughts on this, and also that as we move towards GST 2.0, what technology investment should company prioritize to stay ahead in this evolving compliance requirements? And how can a leadership foster the culture of continuous adaptation to these changes?
Yeah, of course, it's a very, very important question at this situation. So we all talk about GST 2.0, so which consists about mandatory invoicing, GSTR 2B driven ITC, auto-populated GSTR 3B. So though not yet mandatory, so but it is going to be mandatory soon, looks like, and tightened credit controls, linkage of returns, compliance under ECRS. Looking at all this, I feel that it is not just a regulatory upgrade. It is a digital transformation. To handle all this task, digital transformation is not just a necessary. But it is a must. Therefore, uh, therefore, the ERP used by the organization should be equipped to handle the location-wise GST liability, location-wise ITC, location-wise trial balance, which is very, very important. And I'm not sure how many organizations are really equipped with this. Providing a location-wise trial balance, and then vendor balances based on the locations, generation of RCM invoices in the ERP, issuing credit note or a debit note linking to the original invoices, which is very crucial during the audit, without which chances of rejecting the credit notes are more. Then IST compliance, I'm not sure how many organizations are really equipped to handle IST compliance through ERP. So this is very good area where organization must look at it. An accurate sales register and a purchase register with all additional information which are required to comply with the GST returns, maybe a date of payment, or maybe a type of supplies and all that. Then control over a non-generation of IRN a QR code for a non-GST supplies, such as IC sales, FOC supplies, and debond sales. So having said this, and it's not just sufficient to have having an appropriate ERP is in addition to that, it is critical for an organization to have an integration their ERP directly with a GSTN. So via API automation for a GST, return filing, e-invoicing, generation of e-way bills. As just now Anil sir has mentioned about, like how Cygnet is working on how to integrate the ERP with a GSTN system. It is very, very important for any organization to reduce manual interventions and reduce error rates. So free flow of the data from ERP to GSTN is very crucial in today's need of accurate compliance. So having integration is not just sufficient. Also, it demands for for a smart reconciliation and vendor follow-up tools in place in place by the organization. Reconciliation between GSTR 2B books, vendors, and real-time real-time reconciliations are very, very important. Additionally, we should focus on to automate the vendor follow-up to resolve any mismatch ITCs. So I think these are all what Anisal just mentioned about in the in the previous question. So it does not end there. Last but not least, so it is very important for an organization to have an or adopt regulatory technology platform. So wherein we all know that today GST department is using or issuing notices by advanced analytical using artificial intelligence, machine learning, and big data. So these notices lead to disruption in operations, kill a lot of time of the tax functional team members, and also penalties. So using digital tools, we can ensure the accuracy of the data, detect potential risk before they escalate into the trigger and penalties. In nutshell, I would like to mention that GST 2.0 will not be just filing returns. It's about integrating technology, compliance, integrity, and governance across functions. I feel that the goal is to move towards reactive compliance to proactive governance. To address to your second part of the question is how a leadership needs to adapt to the regulatory changes. So leadership should treat compliance as a strategic enabler, so not just a cost center anymore. So link it to a business continuity and working capital. compliance is no longer the job of one department, it's a shared responsibilities. So we all know that cash is king, right planning is important in indirect tax function to avoid a blockage of working capital, delay in availing input tax credit, a mismatch of input tax credit, and work on refunds if there are any accumulation of input tax credit, reconsider business partnering with the non-complying vendors. So leadership must communicate the strategic value of compliance and impact due to vendor non-compliance across all the level of the organization, create a tax and compliance awareness in the procurement, supply chain, finance, and IT, not just limiting within the tax department. So regular trainings are very essential, and communication. So set up a monthly learning sessions and publish GST updates across the organizations. And also, freedom should be provided to a tax team to explore a new or innovative tool to handle the compliance and compliance topics. So align compliance with the business strategy, not just a manual legal mandates. So I feel a leadership must drive a mindset where every regulatory change is viewed as an opportunity to strengthen systems and unlock efficiency.
Thanks.
Kunal, if you allow me, I'll just add one more point before you close.
Yes, sir.
From the IMS perspective, the purchase part of it, I want to add one more thing. Look at account receivables. And now think about that you as an organization, if you also get an exposure to what is going to be the likely status of the sales invoices you have generated, because somebody down at the other end is going to take an IMS action on all your sales invoices, paying, accept, reject. So one, that visibility is important. Suddenly the tax team will be in a position to tell the rest of the department that, hey, look, your invoice has gone on hold. The receivables are likely to get impacted. Let's get it addressed. That's one part. And the most important, the day IMS will get implemented would be, today I can share pain. My pain is I generate 500 to 1000 invoices in a month. And whenever collection comes, the point comes out is, did you send the invoice? Where did you send the invoice? It is with whom? I think those aspects to a very large extent will get addressed, because if you're doing day-to-day IMS action, the invoice would have been received, would have got processed. I would be in a position to see within 7 days to 10 days that is a respective tag available into the IMS section, whether it is accepted, rejected, or whatever it is. That would streamline my receivables to a very large extent. So I just thought from the receivables perspective also, it's going to make a big difference. That's it. Please carry on. Thanks.
Thanks, Anil sir. Thanks, Prasanna sir, for sharing the insightful information. And I hope audience would love it, would have loved it. Before moving to Reshma, I would quickly have two questions which are raised from the audience. There is one question from Mr. Ramakrishna. Sales promotion expenses like event expenses come under ISD mechanism. If company has 4 location across the country, but this event will accrue future sales in other location, is bank charges ITC? Do we need to allocate to other location?
Chaya, one request. I think we can stretch by another 5 minutes, but we should answer all the questions, because people who have stayed throughout, they will be expecting responses for their questions. So, so let us not restrict it to only 2 questions.
We will continue the other queries after Reshma. There is one more question from Mr. Shubham. If I have received the invoice on regular GSTN instead of ISD GSTN or RCM liabilities paid under regular GSTN, what are the timeline to issue invoice to transfer the ITC from regular to ISD GSTN?
Okay, quickly I'll answer these 2 questions. So for the first question, which is regard to your sales promotion activities, see, the idea of ISD is that if the expenses can be attributable to multiple branches or all your branches. The question of whether the benefit accrues today or at a later point of time is not material. But the question is whether it is attributable to more than one location. If answer is yes, it has to be distributed. So in your question, sir, bank charges as well as sales promotion certainly is going to benefit all the branches. In your example, distribution is required for. But if you have a concept of even doing marketing through local print media, then the distribution should happen only to those locations where the print media is accessible. If it's through a digital platform, yes, it has to be throughout all the branches. But if it's print media, it's restricted only to few locations, then it has to be limited for distribution only to those states. The second question with regard to transfer of credit from regular to ISD, one of the challenges which we have is that we discharge our RCM liability while filing 3B return, where the due date is on 20th of the following month. But the transfer of credit from regular to ISD should happen by 11th of the subsequent month, which is through your GSTR1. So ideally, the computation of RCM should happen before you file your GSTR1. Transfer this common credit, which is your RCM in your example, in your GSTR1. While filing 3B, you will avail the credit, means you discharge the RCM liability. You will avail the credit and also discharge the liability on account of transfer from regular to ISD. Why we suggest that it has to be done in the same month? If this transfer is not done in the same month, you may end up utilizing this credit entirely in your head office GST number itself. Whereas the law is now designed in a manner where such common credits has to be allocated to all the registrations to which it is applicable, and it is not a credit available only for your head office GSTIN. So I hope these two questions have got answered, Jaya.
Thanks, Vikram sir. I guess it answers to your question, Mr. Shubham and Ramakrishna. Okay, we will move to other queries shortly. Reshma, over to you.
Thank you, Chaya. Hope I'm audible, right?
Yes, Reshma.
Okay, I'll just quickly present my screen.
Yes, it is audible.
Okay.
And visible. Both.
Okay, thank you. So I'll be quickly demonstrating on how IMS and ISD has been streamlined through Cygnet application. So we have added the invoice management system under our goods and service tax section. So the IMS module is extended for doing the PR purchase and IMS reconciliation, taking actions on the IMS data and generating a to be on demand. So there are various approaches through which we can get your purchase data on the application. So once the purchase has been uploaded successfully, we can come to the IMS module and download the IMS data from the GSTIN portal. We also have an option to auto sync the any incremental IMS data available on the GST portal on the daily basis. So once this has been synced, we can move ahead with the reconciliation. So before performing the reconciliation, we have certain settings which can be configured based on the business requirements. So we have the setting for the matching criteria, setting the tolerance limit, and also advanced reconciliation powered by AI. So this setting will help find the probable matches, apparently increasing the ITC. So unmatched ITC will be reduced to a greater extent. So once the settings has been configured, we can come back to the portal and perform the reconciliation. So based on the settings which are configured, the PR and the IMS data will fall into the respective reconciliation buckets. So we have match by tolerance, mismatch, near match, PR only, GST only. So once the data has been reconciled, our next step is to take the actions. So we have various methods through which the actions can be taken. We have bulk action option. With a single click, you can take the actions on all the reconciliation types. We have Excel approach available, wherein you can download the Excel, take the actions in the Excel and re-import the same Excel. So based on the data, the actions will be taken. And the next is the automated approach, which we have given under the settings, wherein you can customize the IMS actions. So you can define what actions has to be taken for match by tolerance, mismatch, and even based on the reasons. Okay, due to which reason there is a mismatch. So once this configuration has been done, as soon as you perform your reconciliation and the reconciliation results are derived by the application, the actions will be automatically taken. And further, we can push this IMS action to the GST portal and generate the to be on demand. So this actions can be taken a number of times until you file your GSTR 3B. And also we have vendor-wise reconciliation given, wherein at a vendor level, you can view the reconciliation result and take the IMS actions. And also we have given the option of sending the vendor notification. So you can directly send the vendor communication through the application to all the mismatches or where the IMS data is not available. We have the email approach, and a direct communication on the GST portal of the vendor can also be done. So this notification process can also be automated. And if you wish to, so we have various filters using which the data can be filtered up. If you wish to see the credit note or the invoice level, this can be done through here. And also the IMS is extended to your outward supplies as well, sales. So what action your customers has taken against your sales data. Under the sales module, we have given the option of syncing the counterparty IMS action, and the same will be visible under the sales module. And we have given the filters using which the data can be filtered out. So that's it with the IMS part. Moving on with the ISD module. So the same ISD return has been incorporated under the goods and service tax section, and the similar approach is given here. So we can get your purchase data using the different approaches, and your purchase data will be available under the document section. So once the purchase is imported, we can move ahead with the 6A reconciliation. So the 6A data will be downloaded. We have the automated approach, or you can come to the portal and sync your GSTR 6A. And we have given the similar settings for the 6A as well for performing the 6A reconciliation as well, which can be configured. So based on the filters, you can perform the reconciliation. So once the reconciliation has been done, and you're ready with the ITC results as to what ITC has to be distributed, we can go ahead and take the actions, filter out the set of documents which I want to further distribute it. So the distribution process has been automated through the Cygnet. We have inbuilt the ITC prepare distribution option. So right from the portal itself, we can distribute your ITC and create the distribution invoices. So for calculating the distribution percentage, simply we'll have to just set the turnover for all your locations. So this will be a one-time activity. Last year or last quarter turnover has to be configured here. And based on the turnover, your distribution percentage will be calculated by the system, and the eligible and ineligible ITCs will be distributed to the locations. So once this is done, we can click on the prepare distribution option, and your distribution invoices will be prepared by the system, and the proper tracking of it will be visible here as to what was the ISD purchase invoice number and what were the distribution purchase created and what are the percentage and the corresponding values. Everything will be visible here. And further, the same will be available under the document section, the distribution invoices which has been created by you. And from the document section itself, we can push the data to the GST portal, both your purchase and distribution invoices, and we are good to file your GSTR 6. So the GSTR 6 filing has also been streamlined through the portal itself. So we can perform the filing activity from the portal directly. So the purchase and the ISD distribution invoices which you have created will be available here, and your distribution and your distributed ITC both will be visible here, will be auto-populated by the system, and you can save the distribution, submit and file your GSTR 6 through the portal directly. So this is the entire flow of for your IMS and ISD and how we have streamlined the process on the Cygnet application. Yes, Shaya, over to you.
Thanks, Ishma, for the quick overview. Okay, so now we will move to questions. There is one question from Mr. Vijaya Khan. In IMS, interest is applicable for credit note except after 1 month. Levy of interest for each transaction will have much impact on transactional level. What is remedy for this?
Chaya, I think the 1 month option to keep the credit note pending is yet to be seen in the GST portal. But it has been communicated that it will be made available. So we'll have to see for this July month whether that option is there in the month of August. Uh, from transaction level basis, yes, you'll have to maintain that uh, track of which credit note you would have to accept, which you are going to reject. On a easier basis, you can verify the data which is there in your GSTR 2A, which is reflecting before the GSTR 1 is filed, and take a list of all the credit notes which are uploaded by the vendors. And if you do not think you're going to accept any credit notes, communicate with them before they file their GSTR 1, and ensure that it is not going to reflect in your GSTR 2B to avoid hassle for yourself and for the vendor.
Thanks, sir. It was really insightful. I guess your question is answered, Mr. Vijaya. There is one more question. In IMS, when can expect option keep pending of credit note till 31st October without interest applicable? Whether interest is applicable if dealer reject the credit note
We
after one
don't
month?
think there is any option of keeping till 31st October. I think they're giving only a maximum period of 1 month to keep it pending with respect to credit note.
Whether IMS is not mandatory,
I
respective
have
changes
answered
of.
that, Chaya. That is
Okay,
answered when I was deliberating.
okay, okay. So there is one more question. We are currently taking action only for credit note and not for other type of transaction. Is this approach acceptable?
Can you repeat?
We are currently taking action only for credit note and not for other type of transactions. Is this approach acceptable?
So that means that the balance transactions are deemed accepted. And if there are any invoices in that list which has been deemed accepted but actually is not your credit, that could then become an issue in the future if you have claimed it and you do not have the invoice, or it is accepted but the credit has not been reversed. So suggest to reject whatever is not your expense, not which has been raised by vendors by error, not relevant to your entity, it can be rejected. Otherwise, keep pending, follow up with the vendor, and take appropriate action.
From July 25, we're moving to another question. From July 25, return GSTR 3B is non-editable and liability will be increased if customer rejects the credit note. So IMS is not optional from July 3B return. Whether we need to check validity of such credit note under section 34 of CGST Act?
Ideally, in my view, yes. From validity concept, it has to be verified, but these concepts of verifying the validity is not available in the GST portal. Additionally, whether the original invoice is accepted or not also is not linked in the GST portal. So these two situations will give out a lot of back-end tracking and compliance requirements, which may need to be done.
Please, there is one more question from Mr. Deepak. Please update the latest progress in relation to considering the credit note kept under pending for certain period under IMS.
I think
Last
it's
news.
already that is answered, Chay. You can go to the next one.
Okay, done.
I think there is one question on ISD credit and cross-charge credit, where department has included both ISD and cross-charge for the purpose of Rule 42 reversal. Vikram, will you take that or shall I answer?
Shall I speak the question for you, Vikram sir?
Yeah, you can.
Yeah. So there is one question from Shravan sir, related to ISD credit and cross charge credit. there is a case where the department has included both ISD and cross charge credit for the purpose of Rule 42 reversal. Is it right?
Okay, so what happens is, if we are looking from the perspective of your head office GST number, if it was received in your regular number first and transferred to ISD, so that particular invoice should not be considered for Rule 42, because the head office regular number is just transferred the credit to the ISD number, so that is completely excluded. What is distributed to all the respective GST numbers as a common credit, that gets considered for the purpose of Rule 42. And when we look at cross charge, as I have deliberated in my initial discussion, this cross charge will have to be for any specific service which was provided by one branch to the other, means one GST number to the other. Typically, these would be towards some kind of a taxable activity. If you are looking at doing a cross charge for again your administrative expenses, maybe there is a duplication which is happening between ISD and cross charge again. So this cross charge, you may have to evaluate clearly the purpose for which it was done, and only if it is towards a common service, then this inclusion in Rule 42 computation is required, else that also will get excluded.
Okay. There is one more question. We received the RCM invoice under regular GST number, but since it was not billed to ISD GST number, we are unable to distribute the credit through ISD. How can I distribute the credit?
I think this also was partly answered in my first question, which I've answered. So the RCM which you pay, because you cannot pay RCM under your ISD number, it has to be paid only under your regular GST number. The transfer of credit also should typically happen in the same month. If you're doing the transfer in the subsequent month, you should not take the credit of that RCM credit in the regular GST number in month 1. So your distribution will happen only if the credit is moved to ISD.
Okay. So there is one more question. The GSTIN is registered in Karnataka. IGST e-way bill case was paid with the place of supply in Tamil Nadu, and the order was issued from Tamil Nadu. In
If it
this
is
case,
not a ISD IMS question, I think time being this can be skipped.
okay,
Because if there are any ISD IMS question, I think we should take that first.
there is one query regarding ineligible input tax credit under GST. If a service is ineligible for ITC, such as group medical insurance provided to employees across multiple location, do we still need to do a cross charge or distribute it through ISD and disallow it in respective location? Also, is there any way to take credit for such services if they are being availed at the head office but pertain to all branches?
So in such cases where you are dealing with ineligible expenses, the ideal recommended methodology is to get that invoice in your ISD number only directly, distribute to all your locations as ineligible credit. If you look at the entire ISD structure, you have to distribute eligible credit separately, ineligible credit separately, and each of those respective states, this goes and sits as an ineligible credit. If you take it in your regular GST number, then the problem is you will have to avail that entire credit and do a transfer from regular to your ISD number. So that may pose certain challenges during department audits, where they may question availment of such credit in your regular GST number. But that availment has happened only for the limited purpose of transfer to the ISD GST number. And this credit, once distributed to the respective states, will be an ineligible credit, since the entire expense itself is a blocked credit.
Okay. There is one more question. As per the current process in GST portal, okay, this is related to IMS. Maybe I can ask later. There is one question related to ISD credit and cross charge credit. There is a case where department has included both ISD and cross charge credit for purpose of Rule 42
I
reversals.
have answered. I think you have asked this question. We have answered that.
Okay.
So
That's all for ISD, sir.
I think we have extended by 18 minutes trying to answer all the questions. If there are any more questions, Chaya, you can share to us. We will try to respond to those questions also.
Sure,
Many
sir. Sure. So thank you all for joining the webinar. If there is any questions which are not answered, we will get back to you via email, and we will be publishing a whole blog on this question. So yeah, we will get back to you, each of you, for your queries and answers. Thank you all for the great evening and insightful session. Thanks a lot. And with this, we end the session. Thank
Thank you
you.
all.
Thank you all to the panelists. Thank you, everyone.
Thanks, everyone.
Thank you.
Have a nice evening.